We have always had very strong loan demand. For example, when I first became a member of this credit union back in 1977, I went up and asked the president for a $500 loan for Christmas. Most people join credit unions so they can get a loan. He told me I was approved for the loan, but I was going to have to wait because they didn't have the money at that time. So I waited a week or two, and the transaction happened, and it went great. When I took over the credit union, I told the board I wanted to make a few changes. I said, if somebody needs money and is approved for a loan, we're going to give it to them right away, even if we have to borrow the money. And they agreed. So we were in notes payable. We borrowed the money, and we were in notes payable for over 5 years. We never once got out of notes payable. Our loan demand has always been very strong. Then our loan demand just kept going and going, so I went out to other credit unions and asked them if they'd be interested in putting CDs into our credit union. I have a number of credit unions that have CDs with us right now. Then we stagger the CDs, so I stay over 100% loan to share. I don't have any investments. I don't need any investments. All the money we get in, we can loan out. We have a very strong loan demand. Always have had. My average yield on loans right now is 8.24, and my cost of funds is about 2.5. That's almost a 6% spread, which any financial right now would be more than happy with. And then about 3 years ago, we got into participation loans. What we did is I went out and I sought out a few credit unions that were in need of loans. So I sold over $1 million in loans to other credit unions, and I did that for two reasons. Again, we needed money. So I sold them loans, and they gave us the money to invest in our credit union. And another thing was, I figured someday we may not have the loan demand that we have right now. So I wanted to have the ability to bring loans back into this credit union when our loan demand was not as strong as it is. And right now I have about $600,000 in participation loans out with other credit unions. We have a staff here I have a great staff, and they know how to get loans. One thing that they do is they look at our outgoing ACHs, and if we have an outgoing ACH going to another financial institution, they pretty much know if it's a loan or some other kind of transfer. Then we'll call that member up, and we'll ask them if we'll see if we can bring that loan in-house. And a lot of times we're very successful doing that. When we run credit reports on people, I have a loan officer that is excellent at paying off other financials right off the credit report when she talks to the member. Another thing we do is we match rates, and a lot of smaller credit unions, I have found out, don't match rates. I think in this kind of environment, in this economic times, you have to match rates. You really do.